We've been trumped, wealth acceleration, foreign entanglements, and the structural cost to Black America. Markets do not move on emotion, they move on risk. In early April 2025, reports of expanded tariff announcements triggered a measurable repricing event. Investors recalibrated exposure to trade-dependent sectors, supply chain vulnerability, and projected input costs. The index baseline, previously stable, began to trend downward within weeks. That red trajectory is not symbolic. It represents a confidence adjustment. When tariff uncertainty increases, markets do not wait for implementation, they anticipate impact. Institutional capital rotates, equity valuations compress, risk premiums widen, but the market is not an abstract machine. It is embedded in retirement systems, pension funds, and wage-dependent households. Volatility is transmitted outward. It moves from trading desks to 401k statements, from portfolio managers to small investors, from macroeconomic policy to household stability. Tariff shock is not about trade alone. It is about who absorbs the repricing. We've been trumped. Wealth acceleration, foreign entanglements, and the structural cost to Black America. This is not about personality. It is about structure. When executive families expand private wealth during public office through international deals, digital asset ventures, licensing arrangements, and foreign exchanges, the question is not envy. It is alignment. Who benefits from policy velocity? Who absorbs volatility? Who compounds? Who stabilizes? Black America enters this analysis with 1/10 the median wealth of white households. That baseline matters. Section 1, compounding at the top. Media reporting has documented rapid wealth growth among the executive family tied to cryptocurrency ventures, international development projects, documentary licensing, brand monetization, and foreign state interactions. Whether each reported figure fluctuates is secondary to the pattern. Access plus power plus capital equals exponential compounding. Meanwhile, wage growth remains incremental. Compounding widens gaps geometrically, wages grow arithmetically. The divergence curve steepens. Section 2, crypto, volatility, and retail exposure. Digital asset expansion disproportionately attracts younger investors, underbanked communities, and Black and Latino retail participants. If regulatory posture remains light, while executive rhetoric legitimizes speculative markets, volatility risk flows downward. Retail absorbs collapse. Insiders diversify. For communities with limited liquidity cushions, volatility equals instability. Section 3, foreign gifts and constitutional optics. High-value foreign exchanges reported in media, including aircraft and luxury items, trigger emoluments clause scrutiny. Article 1, Section 9 exists to prevent executive dependency on foreign states. Even perception of transactional diplomacy reshapes civic trust. Trust erosion has material consequence. Communities disengage. Participation declines. Institutional confidence fractures. Section 4, budget priorities. If executive adjacent wealth accelerates while SNAP access tightens, Medicaid faces structural pressure, housing assistance lags inflation, and student debt relief stalls, disparity becomes operational. Black Americans are disproportionately represented in safety net programs. Policy plus compounding equals stratification. Section 5, judicial architecture. Lifetime appointments influence voting rights, labor law, corporate accountability, and civil rights enforcement. Black communities intersect with federal courts at elevated rates. Judicial ideology becomes generational infrastructure. Conclusion: "We've been trumped" is not a metaphor of defeat. It is a structural diagnosis of asymmetrical compounding under executive proximity. Trump Report Card. We've been trumped. Structural impact assessment. Economics. Grade D. Rationale. Media reports and public disclosures indicate substantial executive adjacent wealth growth during tenure through crypto ventures, international licensing, and global development deals. Simultaneously, Black median wealth remains structurally low relative to national averages. Asset-driven growth disproportionately benefits existing capital holders. Underbanked communities face volatility exposure in speculative markets. Compounding at the top without proportional wage growth or targeted wealth gap correction widens divergence. The issue is not legality. The issue is distributive effect. Civil rights. Grade C-. Rationale. Lifetime judicial appointments reshape voting rights enforcement, labor protections, police accountability standards, and corporate liability. Executive rhetoric has influenced national discourse around race and protest movements. For communities historically dependent on federal civil rights enforcement, judicial reorientation carries long-term structural consequences. Impact is generational. Public trust. Grade D-. Rationale. High-value foreign gifts publicly acknowledged or widely reported trigger emoluments clause scrutiny. Even where legal arguments exist, scale and optics generate constitutional concern. When executive families accumulate visible wealth while public austerity narratives persist, perception of proximity-based capitalism deepens. Trust erosion is measurable in civic participation and political disengagement trends. Democratic integrity. Grade C. Rationale. Foreign business ventures, international licensing agreements, and global development projects intersect with diplomatic relationships. Even if technically separated through corporate structures, the blending of private and public visibility creates structural tension. The issue is not proof of illegality. It is blurred lines between governance and personal enterprise. Wealth gap impact. Grade D. Rationale. When policy emphasizes capital markets, corporate deregulation, and asset appreciation without direct structural interventions addressing the racial wealth gap, divergence increases. Black households, disproportionately wage dependent and undercapitalized, do not benefit equally from capital acceleration cycles. Exponential growth at the top plus linear wage growth at the base equals widening disparity. Final assessment. This report card does not measure personality. It measures structural consequence. If executive wealth acceleration continues at high velocity while median black wealth remains structurally stagnant, divergence compounds. Compounding is mathematics. Disparity is outcome. This has been a production of The Quiet Parts, out loud by the last witness for Black News and Views. The divergence is not accidental. It is structural. Expand your awareness beyond the wall. Your commitment to looking deeper sustains this work. Thank you for supporting Black News and Views.